What if I told you one of the most trusted dividend ETFs, SCHD, is showing signs of trouble? A recent 6.53% drop and slowing dividend growth have left investors wondering, is this the beginning of a long-term decline or a rare buying opportunity? What's behind this drop in one of the most popular dividend ETFs, and what implications does it have for your investments? Stick with me as we delve into the factors contributing to this decline, analyze the data, and explore strategies to navigate this situation effectively. SCHD has long been a favorite among dividend investors, renowned for its consistent payouts and attractive dividend yields. However, recent market movements have raised concerns about its performance and future prospects. Let's explore what's happening with SCHD and the broader market context influencing its trajectory. To understand SCHD's recent performance, it's essential to consider the broader market environment. The Federal Reserve's hawkish remarks about interest rates, the labor market, and inflation triggered a massive sell-off. While a 0.25% rate cut might sound like good news, the hidden implications behind Jerome Powell's comments sent shockwaves through the markets. The S&P 500 dropped over 3%, the Nasdaq 100 fell by 4%, and the Dow Jones Industrial Average marked its 10th consecutive losing day, something we haven't seen since 1974. Meanwhile, small-cap stocks like the Russell 2000 plunged 4.5%, showing how widespread the market turbulence really is. Dividend-focused ETFs like SCHD are particularly sensitive in such climates, as rising treasury yields often entice conservative investors away from equities. SCHD's price currently stands near $27.29, reflecting a notable decline from its previous highs. While this may not seem dramatic at first glance, it indicates a period of underperformance for a fund that's typically known for its stability. Several key factors are contributing to SCHD's recent downturn. Dividend growth. Slowdown. SCHD's dividend payout growth has slowed significantly. Its latest annual dividend increase is 6.9% compared to double-digit growth in past years, like 13% in 2021 and 11.5% in 2020. For income-focused investors seeking consistent growth, this slowdown is a red flag that reduces its attractiveness. Sector exposure. SCHD is heavily weighted in sectors like financials, 21.3%, industrials, 16.7%, and consumer discretionary, 14.4%. 1. Financials, such as JP Morgan Chase and Bank of America, have faced challenges due to rising borrowing costs, reducing profit margins. Second, industrials like 3M and Caterpillar are sensitive to economic cycles and have seen their growth prospects decline amid higher input costs. 3. Consumer discretionary stocks, including Home Depot, are pressured by reduced consumer spending as interest rates climb. Rising treasury yields. With 10-year treasury yields surpassing 4.5% income, investors are finding safer alternatives in fixed-income securities. For example, short-term treasury bonds like the iShares 1 to 3-year Treasury Bond ETF, SHY, now offer a yield of 4.6% compared to SCHD's trailing 12-month yield of approximately 3.6%. This shift has drawn significant capital away from equity-focused ETFs. Market volatility. The Volatility Index, VIX, has surged over 30 points recently, indicating heightened uncertainty in the market. This has led many investors to move away from dividend ETFs like SCHD, which are perceived as higher risk during turbulent times. Economic indicators. Recent data shows that GDP growth slowed to an annualized rate of 1.9% last quarter, down from 2.4% earlier this year. Meanwhile, inflation remains sticky, with core CPI at 3.7%, well above the Federal Reserve's 2% target. These macroeconomic headwinds weigh heavily on SCHD's key sectors, reducing profitability and dividend sustainability. Understanding these factors is crucial for investors looking to navigate the current market landscape and make informed decisions regarding their holdings in SCHD. Examining SCHD's technical indicators provides further insight into its recent performance. Price movement. SCHD's price has declined by approximately 6.53% over the past 10 trading days, falling from $28.93 to $27.05. This consistent decline indicates sustained selling pressure. Relative Strength Index, RSI. The RSI for SCHD has recently approached oversold territory, suggesting that selling pressure may be waning and a potential reversal could be on the horizon. Moving averages. SCHD's 50-day moving average has crossed below its 200-day moving average, forming a death cross, which is typically interpreted as a bearish signal, indicating potential for further downside. Volume trends. Trading volumes have spiked during recent declines, reflecting heightened investor activity and potential capitulation, which could precede a stabilization or rebound. Investors should monitor these technical indicators closely as they provide valuable insights into market sentiment and potential future price movements. The recent decline in SCHD presents both challenges and opportunities for investors. It's essential to assess your investment objectives and risk tolerance in light of these developments. Long-term investors. If your investment horizon is long-term and focused on income generation, SCHD's consistent dividend payouts and exposure to high-quality U.S. companies may still align with your goals. Despite recent volatility, SCHD has a history of resilience and could continue to provide stable income over time. Short-term traders. For those with a shorter investment horizon, the current volatility may present opportunities for tactical trading. However, it's crucial to exercise caution and employ appropriate risk management strategies, given the potential for further market fluctuations. In either case, staying informed and regularly reviewing your investment thesis is vital to ensure it remains aligned with your financial objectives. Here are several strategies to consider in response to SCHD's recent performance. Portfolio diversification. Diversifying your portfolio can mitigate risks associated with sector-specific downturns. Consider allocating assets to other dividend-focused ETFs with different sector exposures, such as the Vanguard Dividend Appreciation ETF, VIG, or the iShares Core Dividend Growth ETF, DGRO, to achieve a more balanced portfolio. Dollar cost averaging. Continue investing in SCHD at regular intervals to average out your purchase price over time. This strategy helps reduce the impact of short-term market volatility. Rebalance your portfolio. Reassess your overall asset allocation and consider reducing exposure to underperforming sectors while maintaining exposure to high-quality dividend-paying stocks or ETFs. SCHD's decline reflects broader market trends, including a shift towards fixed income as interest rates rise. This is a natural part of the market cycle, and history has shown that dividend-focused strategies tend to perform well over the long term. Remember, every downturn is temporary, but the lessons you learn and the strategies you apply can last a lifetime. Keep your goals in focus, do your research, and stay the course. Investing is a marathon, not a sprint, and staying informed is your most powerful tool. Make sure to like this video, subscribe to the channel, and let me know in the comments. Are you holding SCHD, and how are you navigating this dip? Let's keep the conversation going.